The New Zealand housing market has recently crashed. And could the same thing happen here in Australia? I was actually just in New Zealand with my family for a holiday. It is a beautiful country. We spent 5 days in Queenstown and 5 days in Arrowtown, getting in a little bit of skiing, eating a lot of food, doing some jet boat rides, seeing some farms. It's such a beautiful place. But what on earth is going on with the housing market, with Auckland dropping 19.7% and Wellington City dropping up to 27% from their all-time property highs? So there's a title for you: the New Zealand housing crash. Could it happen here in Australia as well? So to give you guys a little bit of context, during the global financial crisis, houses in New Zealand dropped around that 5% mark, and houses in Australia dropped between that 5 and 12% mark from the GFC in 2008 through to 2011. Now, the New Zealand house prices, as we said before, have dropped from their highs something like 20% or even up to 27%. So this is a much larger, this is not just a little blip, this is a much larger drop in housing prices than we've previously seen. Now, this chart on screen shows you New Zealand real housing prices from 1995 through to 2025. And you can see that long upwards trajectory of property prices, but this big correction in prices between 2020 and 2024, 2025. Now, the big drop in that index is due to some key reasons, which we're going to unpack here today. So what are those key factors behind the drop, significant drop in New Zealand's housing prices? The first one is low migration. In New Zealand, they've shut up shop in terms of allowing mass numbers of immigration occurring into the country. What that means is it's reducing the demand side of the supply and demand equation when it comes to property prices. Less demand means less people, means less competition, and lower property prices. The next key thing is they've had a tax crackdown, which people have been calling for here in Australia for many decades. Jacinda Ardern and the New Zealand government have changed their tax policies around capital gains tax, impacting the amount of taxes that people are having to pay on property investments. And this is, again, reducing the demand for investors to want to buy property in the New Zealand market. The third key point in New Zealand is that housing oversupply. They've been able to have building keep up with the demand on the market and on the ground, which means if enough houses are coming through the pipeline and enough of that supply is being soaked up, then New Zealand doesn't have the same situation we have here in Australia, where our major capital cities tend to be undersupplied, and even when that new housing stock comes in, it's soaked up very quickly. So based on all of those factors, what does this mean for Australia? Are we going to see property prices tank just like they've seen happen in New Zealand? So let's take a look at the Australian market. Our house prices keep growing. We've seen record demand with these interest rate cuts that property prices are continuing to move up and up. You look at markets like Darwin, Melbourne, Brisbane, they're key front runners in terms of Australia's major capital cities at the moment, which have really strong potential growth over the next 3 to 5 years. We are also seeing rents climb, and so rents are driving investors to want to stay in the property market. Your typical demand or rental return for a house here in Brisbane is around a 4% gross yield. But there's also ways to boost rents on top of that. If you're keeping up with regular rental increases and you're adding secondary dwellings, you could get 6% gross yields on residential property here in a major capital city. And so with rents continuing to climb, it's keeping investors motivated to stay in the property market. We are also seeing demand increase, and that's due to the headcount here in Australia. We have had record immigration numbers, over 500,000 people a year coming into the Australian market, and that is driving up demand for property, especially in those sought after locations. And so that is what's making the difference between Australia versus New Zealand. It's that we haven't changed the policies like the New Zealand government has changed, which has affected the supply and demand equation of property. So we have big first home buyer grants where people can get in the market with 2%, 5% deposits, waiving stamp duty. So the government policies here in the Australian market are motivated towards stimulating first home buyers, stimulating the housing market by allowing people to get in with less and less capital. These policies, whether you like them or not, mean that people have the ability to pay more for property. And if people have the ability to pay more and they find the house that they want, they are going to pay more to buy the property that they want to buy. The next thing is student debt is being excluded from a number of calculations. There are certain policies here in Australia that are allowing people to roundhouse their student debt separately from their serviceability calculators. Now, the way this is done is major banks like NAB and CBA are saying to people who have student debt, if you can show that you're going to pay off your student debt within a 12-month window, we can exclude that from the calculations on your mortgage. And so this is enabling people to get access to more serviceability and again, buy property. The third point is that migration piece. We have migration at record levels. And so if we're allowing in 500,000 people each year into the country, this is only going to fuel the demand side of the equation, putting more pressure on local markets and driving up prices over time. Now, running a specialist Brisbane buyers agency in myself and the team here at Purpose Property, what we're seeing on the ground here in Southeast Queensland is the demand side of the equation, where people are willing and accessing capital to pay more for property, is not slowing down. And the other side of the equation, which is the supply side of the story, is not being fixed anytime soon. Buying a piece of land is very expensive. $400,000, $500,000 plus as a starting point. And then actually creating an asset on that product or creating a new home is costing $300,000, $400,000 just for a basic 3-bed, 2-bath home. And so when you look at the maths, an entry-level property out in the suburbs is starting around $700,000 to $800,000. And what this means is the established areas in Southeast Queensland, which are infilled already, and have been built up in the 1920s, 1940s, 1960s, are very sought after, and based on all the fundamentals are going to continue to grow strongly year on year with compounding growth of 6, 7, 8%. Those numbers add up very quickly when you're getting compound growth on, for example, $1 million asset. So the big question is, what would it take for Australia's property market to crash, just like New Zealand's has? It would take immigration essentially stopping or slowing down. Now, I don't see the Australian government slowing down the planes, or it used to be boats if you were talking 10 years ago, but I don't see the Australian government stopping immigration coming into the country. They are motivated to grow GDP and grow Australia as an economy to compete on the world stage, and so I don't see the Australian government slowing down the immigration anytime soon. Now, they could also change tax breaks. And as we've seen historically, if that was to happen, like it happened in New Zealand, it would change the property market. People would be motivated to invest in different assets. If they were to remove capital gains tax exemptions or remove capital gains tax completely being free on the family home, those types of tax breaks being removed or adjusted, or negative gearing's been talked about, any of those policies changing could impact property prices. But the reality is, governments that try and make major policy change on housing have been negatively received by the wider Australian public. So unless the bulk of the public wants these tax breaks removed, then I don't think it's going to change here in Australia anytime soon. The third thing is housing supply. We are struggling to create enough houses here in Australia. But if we were able to create a housing supply story here in Australia, where builders were able to pump out homes and they were doing builds in 6 months, 9 months, rather than 12 to 18 months, that's where you could see housing supply come up. But it's those established areas where you can't really create the housing supply. You can only go up in terms of apartments, but most Australians are still wanting 300, 500, 700 square meter blocks with the family home. So what does this mean? If you're a buyer, a home buyer, or an investor, what does this mean in terms of the New Zealand market crashing? Should you hold off? Should you wait for a market crash, another GFC event to get into the market? My opinion is you shouldn't wait. Don't wait for a crash to happen. There's always talks of policy changes or crashes or negative sentiment in the property market. You need to make informed decisions with a long-term view. If you think houses in Brisbane are going to perform well in 5 and 10 years' time, you're not investing for the next 12 months. You should be taking an investment horizon of at least 5, 7, or 10 years. So with that long-term vision, you're not really worried about the policy impacts in the short term. You're looking at where those markets are heading over that longer time horizon. You also need to understand what is driving our markets. Look at New Zealand and look at the key factors that have led to property prices falling there, and compare that to Australia's market and what's happening here. When you look at the story between the two markets, you can see that Australia is unlikely to have the crash because we're unlikely to change those key factors that we spoke about in terms of property prices dropping dramatically in, say, a 1 to 2 year period. Now, if you're looking to buy a property here in Southeast Queensland in the next 6 months, head over to purposeproperty.com.au to book in a free chat with myself. We are local area experts in Southeast Queensland, from Caboolture down through to Coolangatta on the Gold Coast. We look at 6 major local government areas in Southeast Queensland, specialising in this market, helping homeowners and investors break into the market and buy their next property here in Southeast Queensland. I'd love to hear your thoughts in the comments below. Do you think Australia is due a housing market crash like New Zealand? And will these things play out? And make sure you give this video a click over here for more things on real estate, renovating, and financial freedom. I'll see you in the next one. Peace.